Hey, good morning, everybody. I'm Steve Craig, the Mid-Market Sales Manager here at simPRO. Thank you for joining me and our panelists as we discuss cash flow in anticipation for the end of the financial year. Just firstly, to give you a little bit of background on simPRO, we are a job management software that was founded 20 years ago by a chap called Steve Bradshaw. Steve built up a successful electrical contracting business here in the UK before shutting shop, and lucky for him, moving to Australia, where he started the process again, but didn't want the same pitfalls that he had in the UK, where he had a lot of disjointed processes, a lot of paper, a lot of spreadsheets. So roped in a developer, and together they started the first version of simPRO. Fast forward 20 years, we've now got over 7,000 businesses running simPRO globally, 150,000 users, who all are streamlining their businesses and improving their cash flow. That's enough from me. My job today really is to keep these guys in check. So let me introduce you to our experts from across the electrical industry. So Rob Driscoll, can you please give us a little 30-second introduction of yourself, please?
Well, I'm Rob Driscoll. By trade, I'm a solicitor and a mediator. I am the Director of Legal and Business at ECA, and I head up the Business Policy and Practice team at ECA. I sit in the Cabinet Office chairing their payments group, so I help advise government on how to improve payments amongst the SME community. And I look at all things to do with contracts, payment, procurement, and I also sit in the Construction Leadership Council in their Business Models Group and their technology lead for the Business Models Group. So that's me. Thank you.
Cheers, Rob. Robert Davidson, over to you.
Yeah, no worries. So I'm Robert Davidson. I'm a chartered accountant, graduated way back in 2003, worked for small, medium and large accountancy practices over the years. Been around the sort of cloud accounting space mostly for the last sort of 10 years or so. I currently own a cloud accountancy practice called Slick with 2 L's, which is a modern cloud accountancy practice, basically talk about everything processes, everything automated. Our 2 main offering are we help businesses move to cloud systems, or we basically become that piece of the jigsaw for filling your financial team. And we're much more involved in sort of more traditional accountants. We have a lot more touch points, we communicate a lot more often, and generally work with businesses in the sort of 250,000 to 40 million pounds turnover range.
Brilliant. Cheers, Robert. We're also joined by Emerson Patton. Emerson.
Thanks, Stephen. My name's Emerson Patton from Bright Business Advice. I'm the founder and owner of Bright. I've been business coaching now for 17 years, and we specialise in helping M&E contractors, fire and security contractors to grow their profits, improve their cash flow, free up their time, basically to make their business better. And really what my passion is to help people get time back in their lives to enjoy it with their family and do the things they want to do with the resources to enjoy it. So we specialize in doing that. I'm also the first ever business advice firm to be a member of the ECA as a commercial associate member. So that's quite good. We're award-winning business. We've won numerous awards as well. So that's what we do, give advice every day. I've got about 40 odd contractors that I'm helping every month to grow and develop their business. I'm a bit like a personal trainer for your business, but instead of making your body thinner, I'll make your wallet fatter.
Nice. Awesome. And lastly, somebody who's in the trenches, you could see James Harrison.
Yeah, thanks, Stephen. I'm James. I am the director and founder of Fusion Electrical. We're a domestic, commercial and industrial electrical contractor. We operate out of the northwest of England. We've been operating since 2014. I started off the company on my own. We've now got a workforce of 14 members of staff. So I've definitely experienced the highs and lows of running a business. And yeah, hopefully today will be really informative for everyone.
Brilliant. Cheers, James. Thanks, everyone. We'll also be taking questions from any of you that are joining us on this demo once we've had our initial discussion. So please put those through on the question box as well. Great. Well, let's kind of dive in. So really, I just wanted to start things off really by understanding if the way businesses manage cash flow has needed to change in the last 6 months to 2 years. So Robert Davidson, maybe you can kick us off and talk about anything that you've seen with your clients.
Yeah, I think just the timing at the minute, it's a really sort of tricky period. I think when sort of COVID hit and furlough came out, that was a bit of a lifesaver to a lot of businesses. Now that's sort of ended. Businesses are now having those staff costs and things implemented. There's a lot of other government schemes like the Vat Bill that happened as well. So a lot of people are now having to repay that information. So they had that basically relief maybe 18 months, 2 years ago, but now they're starting to pay for it, the same as like CBIL loans, bounce back loans, those type of things. They've had the money, they've saved their business, or they've continued their business in the same sort of form, but now they're actually having to pay those amounts. And I think just in obviously construction industry in general, the domestic reverse charge has been a bit of a hindrance for some businesses on the sort of cash flow front. So I think all these things combined at one time, it's been a bit of a, I don't want to say crappy, but it's been a bit of a crappy time for businesses. But I think now as well, we're starting to see that turnaround and maybe business coming back, projects starting to kick off again, and things starting to pick up. So hopefully that'll ease on the cash flow side.
Yeah. What about you, James, as a business owner?
Yeah, I mean, I think COVID's played a massive part in how we've operated as a business in terms of like projections, because when COVID happened, you know, historically we could look at a year and think, right, we're entering into the busy part of the year now, and we know we're going to have a increase in work, and we're going to enter the quiet period. COVID kind of turned all that on its head, and it threw everything off kilter, and it was really difficult for us to track busy times and quiet times, because when you thought you were going to be busy, you were quiet. When you thought you were going to be quiet, you were going to be busy. Also, people weren't paying as well as they used to in terms of on time, because at certain periods during that lockdown and with the pandemic and stuff, people didn't know what was happening. So, you know, they might get some work done and then think, right, I need to hold on to this money for 60 days, 90 days, when really they need to pay the bills. So it's had an impact. It's not been a negative impact on us because we've kind of been busy throughout. But I mean, it's definitely had an impact in terms of people paying, people worrying about paying, and people worrying about getting work in. Yeah, it's just been a weird time, I think, especially with planning for busy and quiet periods.
Yeah, for sure. Emerson, in your experience then, so what's the biggest kind of cash faux pas that you've seen or experienced, and I guess what advice would you give to your clients to avoid that?
So, well, obviously, when we were going down into COVID, everyone was a bit concerned and worried. We actually have a WhatsApp group with all of these contractors on, so they're all discussing it. In the end, I went on to another panel show and took 3 of them with me, and we did a talk about cash flow. And these 3 businesses were people I'd coached before we went into the pandemic, so they had cash flow forecasts in place, right? So that the biggest issue I see when I look at most small businesses, they might do a monthly P&L, they might have a look at the history, but they're not looking, I call that looking at out the rear view mirror. But what they need to be doing is looking out the front windscreen and see what's actually coming at them, and that's the cash flow forecast. So a lot of them aren't actually looking, they're not looking at what work's coming up, when the money needs to come in, when the money needs to go out. But fortunately, these 3 guys, Wadey's, RJ Wilson and EML Electrical, they had a really solid cash flow in place, so they were able to predict and start working out what they needed to do, and they were able to make better decisions. Because that's the thing, if you haven't got any information to look at, you're looking at the windscreen and it's smeary and you can't really see what's going on. So you need the data to actually see what's going on. I think most people don't bother to get the data, yet the accountants can help them if the people know to go and speak to them. People like Robert will be great at like helping them get the information, interpreting it. A lot of them too scared to interpret it, they don't really know what it means, whereas if you sit down with someone who can explain it, they can understand where they're at. So it's a misjudgment of what's going on. And obviously the cash flow gap started expanding, which is a key problem when people are basically doing the deal, then delivering. There's a gap between that, and they have to buy the parts and they have to pay their subbies and their employees, and then actually getting the money off the clients. And the cash gap was growing, and that means you need more money in the bank to sort of cash flow the whole thing. So the key issue was making sure that they were bringing the money in, invoicing on time, chasing it in, and actually regularly getting on top of the systems for the finances. So that's kind of stuff that on that area, obviously we look at all of the 7 sectors of a business, so leadership, management, finance, operations, HR, marketing and sales. But for the finance bit, it's like the pinnacle where everyone's either in profit or loss, and it's the margin that is the key thing they're looking at as well. Because a lot of them doing work for nothing, otherwise it's better going off and burning a few £50 notes. You know, you've got to go and actually look at the margin and make sure you're making money up, which is what simPRO does, to be fair, which is why a number of my clients use simPRO, because it helps them see the margin, which I think is great.
Yeah, brilliant, Emerson. Rob Driscoll, what about yourself? What observations have you made, or can you talk about, I don't know, a specific or a big cash flow faux pas that you've observed over the years?
I think so. We run a help desk where we deal with 3,000 electrical contractors, and that's right from NG Bailey and Skanska's right down to man in a van. I think it very much depends on your business model. So pandemic, you've heard other people talk about that. We found some had wholly focused their risk in one area. So you had purely domestic B2C contractors, business to consumer contractors. Obviously, lockdown, that dried up. Even though the industry was told to carry on broadly, that area dried up because people were in lockdown in their homes. So that hit cash fairly hard. Whereas those had spread the risk, and you heard James talk about his business being domestic, commercial, industrial. And if you've got FM in there, you'll spread the risk right across it. So what we found is that the easiest one to survive from a cash perspective were the ones that could pivot. We heard that word overused almost in hospitality, pivoting the business. But it really was, okay, if we're not going to be able to get food from that source, where can we go next? And I think the other point I'd make is the inherent difference between, I'll use a Carillion example to point it out, because that's when I was involved in mopping up the mess on with the government. They counted work in progress as cash. It's not in the bank, it doesn't count. Which is why they say the difference between profit and cash. Cash being king here, it was very much about what was actually received. And I think for anybody using software or manual tools or anything out there, realise there's a very, very different working environment if you're dealing business to consumer versus business to business. There's a whole different contractual ball game and credit control systems that have to go with it. So that's my biggest takeaway.
Cool. Robert Davidson, just going on from what Rob's saying, what would you say the most important things are to consider regarding money and costs going out of your business?
Well, the first thing I would say is probably touching something Emerson mentioned. It's really about completeness. It's one of the biggest things we see, especially when we look at cash flow forecasts, are they complete and are they accurate? Because if they're not complete and accurate, then there's no point in making decisions on them. And I guess it really comes back to what the interpretation of them is. Can you look at that cash flow statement and interpret it and make decisions on it? So, but in terms of sort of cash going out, I think it's more about sort of reviewing it regularly. I think the margins is absolutely vital. We had an example where I had a client, it's something I always do, is ask a client what their gross profit percentage is. And I don't think anyone ever gets it right. I think they always overestimate what their gross profit percentage actually is. And the example I had was we spoke to a client and it was 20%, they said. Now we went back over the previous year and it was actually down about 12-13%. Now, one of the things that they hadn't done is they hadn't monitored the costs from their suppliers. They were increasing month on month on month, but they weren't increasing their prices to reflect that. So effectively their margin was getting eroded without them noticing it. Now, just by tracking that one simple metric, we saved that client between about £100,000 and £150,000 a year on the bottom line. And it's from monitoring a tiny, tiny, simple, basic metric. But if you're not doing it, then you're not able to track that actually your costs are going up and you're not monitoring them. Yeah. But just sort of following on from that, also monitoring your overheads carefully, because if you've got a 20% gross profit margin, you need £10,000 worth of sales to basically add £2,000 to your bottom line. But if you're not reviewing your overheads regularly, you could save £2,000 maybe on your overheads, and that's equivalent to £10,000 of sales. So very vital to monitor the two parts of it.
Yeah, good advice. James, what about you? How do you go about forecasting and managing money going in and out of the business?
Yeah, I mean, similar to what Emerson and Robert have said, cash flow forecasts, everyone's mentioned them. They are absolutely critical to a business. I'll be honest, back in the day when I first set up, and I'd never even heard of a cash flow forecast. And obviously, as the business has grown, it's super important to take time out, sit down with a business coach or your accountant, and actually put something together. And like Robert said, review it, continually review it, do a couple for different situations as well. They're absolutely invaluable. They've been invaluable for us. We're able to now project right the way to our end of year, using different scenarios of if we were to lose members of staff, we were to gain members of staff. It's got all our overheads on there. I can't stress enough, a cash flow forecast is so crucial to a growing business. Also, again, what Robert said, staying on top of your overheads. So we've got a spreadsheet, we put all our overheads on there. I can calculate how much, right the way down to how much per hour it's costing us to run our business per month. If you can get these key elements of your business right, you're going to do well, because then you're able to work out how much you should be charging your men out per hour. You can increase your margins on that. Another one as well is managing your money. I think a lot of business owners will see a big pot of cash in the bank account and think, right, we're quids in, let's go and fork out 10 grand on a new van or a load of new kit. You've got to understand what that money's there for. And if you've got a load of bills coming out at the end of the month, don't go and blow that money, because it's really attractive to see a load of cash in your bank and you think, great, let's go and purchase loads of new stuff. But don't do it until you've properly worked out what's coming out at the end of the month, what bills are coming up in that quarter. You might have a VAT bill coming up, and if you go and spend 10 grand on something, you're 10 grand down for that VAT bill. So you've really got to plan and budget properly, and don't sort of get that, those pound signs in your eyes thinking, yes, we can spend all this cash, when really you do need to plan stuff better. So they're kind of like my pieces of advice.
Can I just add something onto what James was saying there? There's a great book called Profit First for Contractors, and I make all of my clients read it, because a lot of the guys aren't focusing on the profit enough. So what you inspect is what you improve, and if you don't look for it, like she said, Rob said about the gross profit, you don't, and ultimately the net profit, if you're not looking for it, you don't understand whether you've got it or not. And there's as Rob Driscoll said, it's whether the money's actually in or not is a totally different kettle of fish to what it says. But this Profit First says, as a bit like you said there, James, he says split your bank accounts up. So he talks about having 5 bank accounts: your incoming bank account, and then you've got your capex, your opex, your VAT and tax bill, and your profit. And that way, when the money comes in, a bit like you can imagine 100 years ago, cash would have come in, you'd have an envelope on the dining room table, and you'd have took your cash in from your wage, and then you put it into the different envelopes to make sure it can pay for the food, the clothes, the whatever, the holiday leisure stuff. And that's the same idea with your business. You kind of break those things out, because the VAT money's not yours. You're just collecting it. Don't think it's yours, because otherwise that's what can get you into trouble. The corporation tax bill, that's going to come every year, and you need to make sure you're saving for it. It's 9 months after the end of your end of year, you find out the figure, but really you should know that and be saving for it all the way along. So I always put an extra chunk of money across, even though I'm kind of estimating what I'm turning over, I'll put a chunk of money over for the VAT and a chunk of money over for the corp tax every month, because I've been bitten before. When I first started in business, my first year, I was like, oh, look at this. Whee! I think I did about 100 grand. I was like, hey, money. And then suddenly you went, no, you got a big bill on that. I was like, oh, didn't realize that. And it was a real learning. And for me, finance was the thing I had to learn. When I was a business coach to start with, I was mainly growth, marketing and sales. But luckily I partnered with a guy who used to be the financial director for Pirelli, a guy called George Hanides. And he absolutely taught me all this stuff, because I didn't really know. No one properly teaches you. The accountants know how it works, but we've got to make sure that the accountants are educating the business owners. They usually just go, I've got a girl in the office who does my finances. You're like, no, you need to take responsibility and actually look at it. I mean, it sounds like you're looking at it, James, and actually at least every month having a review on it, which is brilliant. I have to drag guys to look at the figures, because they don't do it.
I was going to make that point. I think, James, you made a good point about not when you got into business, but cash flow forecasting just was not something that was necessarily even on your radar. But I guess people don't have to suffer in silence, and it's working with trusted advisors, whether that's your accountant or a business coach, who can help you navigate all of that as well. Just a reminder for anybody who's joining us here to put your questions through, which we'll get to at the end as well. So Rob Driscoll, what's the cash flow window and how can businesses manage it?
Well, so I'll give you a bit of background. Although I'm a lawyer, I come from an M&E family, and I remember sitting in the garden when I was about 8 years old, and my dad was the director of the single most profitable M&E business in the UK. They turned down jobs, they didn't go for awards, they were just they outperformed everybody in all the majors and M&E businesses and everybody else. And that's because they wouldn't touch it unless they could make money on it. It was not about necessarily the engineering prowess so much as the cash flow. Because you've got to understand, in our industry, we're all intermediaries. We buy things, we deliver it later. The business model for what you guys do is that you agree with the client, whether you're big or small, a price for doing something. You'll then embark on doing that thing over a period of weeks or months. If it's a short job, it just could be days, yes, but even working on someone's domestic premises. And then you hope they'll pay you what you think you're owed at the end of it. So you've already delivered the goods, services, the installation, as it were. So it's a pay as you go in arrears. So don't just keep, I'm not saying don't pay attention to the financial side of it, pay attention to the legal side of it. Our industry tends to be full of people who are slightly allergic to paperwork. A colleague of mine always tells the story that when she walked past my desk, she heard me say to a client once, and he was on the phone saying, I don't get all this stuff, I'm just an electrician. So I asked him, well, hang on a minute, how long have you owned and run the business? He said, 5 years. I said, so you're not an electrician, you're a business owner that also happens to be an electrician. We got to help and support you get the business. So the cash flow window is that, how long is the distance between the fact that I've got to buy both labour and materials, spending money on it, and the fact that I then get the revenue back in the business to pay for that. And on any commercial job, you don't get to apply for payment, this is under the law, until the end of the month in which that piece of work is complete. And then the contractor will define how long that window starts. It could be 30, 45, 60, 90, or in Carillion's case, it was 120 days. That's why Carillion was so controversial, because that window could have been 6 months before you bought any M&E gear and then got paid for it, which makes the business model enormously fragile.
Yeah. James, I guess with the lessons that you've learned from founding your business, what should electrical contractors consider when setting up payment terms?
Yeah, so as Rob just said, sometimes you're at the mercy of the contract and the nature of the work that you're doing. But for us, we don't really like to get involved in projects where payment terms are similar to what Rob was talking about, where we could be waiting 3 to 6 months for payment. That doesn't work for us. We need cash coming into the business constantly. So number one, we look at the contracts and the payment terms before we even do anything and make sure that they're suitable to our business model. That's the first thing. Second thing is, depending on the size of the job, we'll ask for an upfront payment. So we'll ask for a deposit sometimes. A number of reasons for that. It allows us to secure the customer's projects in our diary. It shows that they're committed to us as well. What we don't want to happen is, we commit to a 5-week job and a week before they cancel on us. It's going to really mess up our cash coming in, our diary and everything. So understanding the nature of the work and asking for a deposit, there's nothing wrong with asking for a deposit. At the end of the day, you're making sure that client is committed to you. And locking them in the diary. So I guess that's a piece of advice that I would give is to try and get a deposit if the job allows you to do so.
And that getting the deposit, I think, is one of those things that you can say, look, you're guaranteeing to get your parts, because parts are a problem right now. There's some long lead time parts. So you can literally say to them, look, I know some of my clients have been able to get money off of the main contractor because they know that these parts are 12 weeks to get or whatever, and then they can order them, but the smaller business can't afford to pay for them. But they're saying, look, if you want to guarantee to get them at the price they are now and have them delivered in time for the job, then you need to buy them now. And that's what you have to do. So it's actually slightly changing the model of how it always used to be, that you have to take all the risk. You need to push some back a little bit as well, because in the end of the day, in the contracting industry, you guys are becoming a rarity, right? There are less and less. That's why we have the recruitment issues and all the rest of it. There's less of you about, and therefore you can actually demand, you know, some of your own conditions in the T's and C's, or choose the work that you work on. You know, the bigger contractors trying to secure their supply chain with you. Well, and if they want to secure the supply chain, then they have to buy the parts up front, that kind of thing. Or I just had one guy who said, look, they came back and said, look, this contract 2 years ago, you know, we priced it, it's all coming back up now, you know, a lot of things went off. And he said, well, we need to reprice. And they went, oh, no, that's the contract. He said, well, no, I won't do it then. Well, if we don't do it now, you'll have to get somebody else in to do it, and they're going to price it on the new prices anyway. So either way, you've got to pay the new prices. Even if we don't do it, or if you get somebody else to do it, whoever it is going to be based on the new pricing. So, and because they had a relationship and chose them in the first place, they were able to negotiate. You know, it takes a few, you know, takes a bit of trying to think of some words that aren't rude to be on here, but it takes some golden whatsits to you know, stand there and say to them that you're not prepared to do the work unless, of course, these are the conditions. And you'll find you're in more demand. So what I do with my clients, I help them do a lot of marketing, fill the pipeline, so they've got loads of opportunities. Now they can start picking what they want to do, as opposed to having to take whatever comes through the door. Because a lot of businesses just do the low-hanging fruit, and they're like, I never do any marketing. Yeah, well, that's because you just have to take what someone gives you. Whereas if you do marketing, you can choose the business you want, and that's the big difference as well.
Emerson, how can businesses utilize their existing resource and tools to manage their cash flow?
So of course, efficiency is one of the key things. So what we're talking about cash flow, we're talking about not having enough money to make the spending that you need. So one of the big issues is efficiency. So on site, we've got to make sure that the jobs are done right first time. We've got to make sure that there's, if you have to keep going back the next day, you know, that, oh, we'll just do an extra hour now, or we'll go back tomorrow, you know, we'll go in, we'll have a coffee, we'll, you know, we'll have a chat, we'll have a bacon roll, then we'll crack on with the job for an hour, then we get to nearly lunchtime, then we'll go and do another job. Whereas you could have just spent that extra hour and got the job done. It's more efficient for the business to do that. So the business needs to make it optimum for the team members to want to do that, you know, get the overtime or do that, rather than going backwards and forwards. So you need to work on those efficiencies, and also some of the tools that you get within simPRO. They really help you. You know, the quotes that you get from the wholesalers and that they say on the phone isn't always, sometimes by accident, the invoice that comes through. I'm sure you've probably seen that. So what you need to do is make sure that the invoice matches, and they can do that using simPRO. It'll make sure it matches, so that, because what happens is the guy does the deal and purchases it and somebody else pays the bill, they don't talk. Whereas using a centralized system like simPRO, it means that it checks it's the right price. One of my clients saved over 13% last year just by making sure that everything was what it was supposed to be on the right pricing, that they went out to multiple people and got the right prices. They were ordering in advance, so therefore they didn't have a panic, quick order me 20, get them to site, I don't care how much they cost. And by doing that, they were able to be much more on top of it. And also the credits and the credit notes, because you go and take the kit back and it sits on a shelf somewhere for a while, literally hoping that nobody really knows, and then hope the credits go away again. But actually you need to be on top of all that, because it's your money. And also check the stock that comes in, because you'll find sometimes you end up with extra bits of stock you didn't need. Somebody doesn't know and they just put another one on the shelf, whereas it's probably an extra thing you didn't need that needed to go back in the credits. So it's just tightening up all of those areas. Then kind of like wrings out, you know, more cash into the business. As Robert says, when you get that cash savings, it drops straight to the bottom line, makes an enormous difference. You know, this one of these clients of mine the other year, I think he was doing about, I don't know, 25 grand net profit at the end of the year, and he's now doing 150. Right, he's grown massively in this time, but not only that, they're much more tighter on their profitability. So as Rob says, as his father, look at the money, pick the jobs, work on the right ones. Because I know people who've been taken and credit check before you work with people, especially if it's new ones. You know, because there'll be people ringing you up out of the blue. Oh, could you go and do this? And you'll be used as the bank. So, you know,
I was going to say on that. So obviously, you could, but Robert Davidson, you're looking at the books of people. So how do profitable businesses feel, in your opinion, when we're thinking about, I guess, in the context of cash flow?
Yeah, I think the main thing is not planning ahead. Like, I think cash flow in itself it's all about timings. So it's a timing of when things go out and when things come in. Now, we always do what's called the sort of realistic cash flow as compared to an ideal cash flow. A lot of people, I think, prepare cash flow forecasts based on we're going to get paid after 28 days because that's our credit terms. Now, if your biggest 2 or 3 customers pay you after 90 days, then you immediately have that massive hole. So that's something you have to prepare for. I just sort of following on from what James and Emerson said. James mentioned about the VAT bill. So it's maybe you've got this money, you're collecting it, it's not yours. You have to pay it out. That hits your bank. So if you're not prepared for that, that could be quite a hit, especially if you maybe get wages and supplier payments. And then you've got the corporation tax, so that'll come round, and then you may have to pay that out. And again, you may have other bills. But one of the things that people need to think about as well is the crossover from business to personal, in the sense that people often take money out of the businesses, they then have these liabilities like VAT and PAYE and corporation tax that come out. But because of taking money out of the business, it impacts their personal position as well. So then they have a personal tax bill, and they may not have any funds to pay it. So they get into this vicious loop of having to borrow money from the company to pay their tax bill, and then they're just trying to keep their head above water. And if you're taking money out of, especially a limited company, then you may fall into benefits in kind, you may fall into Section 455 penalty tax, things that you want to avoid. But if you don't plan ahead and monitor that carefully, you can get into this vicious cycle of borrowing money to basically rob Peter to pay Paul type thing. But other things I've sort of seen is loss of a key member of staff is one of the things we see. If there's a single point of failure in a business, then that has to be addressed, I think, as well. And other things like unexpected legal costs, we've seen it. Probably Rob's the expert in this space, but I think someone will maybe not have the right contract in place. They'll have something that isn't legally sound, and it comes back to bite them, and that can end a profitable business overnight.
Yes, Rob, do you want to add anything to that?
I guess I'll give you an economics perspective. So I'm a lawyer, but my job is to also be an amateur political analyst and economist. We're in a rising market. Emerson referred to it earlier. Demand at the moment is above pre-pandemic levels. There's a shed load of work around, which is why you're all having a quite good buoyant day, which means you can pick and choose your work, and you can pick and choose your terms and conditions and your payment windows as a result of that. May not last because of the Russia-Ukraine crisis and various other things on the horizon. So make hay whilst the sun shines. The clever contractors at the moment are doing as others have recommended. They're making sure that they focus their attention on the good clients, the ones that pay consistently, and they've got an even spread of clients across the piece. If you look at us as an industry, I'll give you another headline stat. We are ranked highest among all areas of commerce across the UK for insolvency. We are the most fragile. That's because of the business model I described. Pay as you go, in arrears. We forward fund, whether it's Mrs. Jones' domestic job or HS2, the industry forward funds a project. That's the nature of it. Then we ask, would you be so kind as to pay us afterwards? It's the nature of the beast. So I guess, yeah, the biggest number of insolvencies don't happen in the crash, and we've just been through a very steep V-shaped crash, and we're bounced back out of it with almost aggression at the moment. It happens when you're coming out of the crash because people overeat. So at the moment, there's a huge amount of work around. Just be cautious, take what you need, fill your order book up, but bear in mind that inflation bit, which I'll come back to later if I can, but I'll say that for now.
Okay, great.
Cool.
James, one for you. On a day-to-day basis, how important is it managing variations or changes to jobs and projects to manage your cash flow?
Yeah, massively important. I mean, you know, without banging the simPRO drum, simPRO allows you to put real-time variations on your jobs. If you're on a job and it's growing, we've got a large one in Hale at the minute. Every time we go to site, clients adding additional work, and we need to track that work because that's billable. And we want to make sure that anything that we do that's a variation or a deviation from the original scope of works, we're going to be charging the customer for, because our lads are on site, we're using materials, and they need to pay for that. It's really easy to lose track of what you've done, what materials have been used, and where the job's up to if you're not keeping a record of it. And this is where, again, businesses can fall down, because if you've got a large scale job and there's multiple different variations on there and you're not keeping a record of them, and then you start getting them wrong, how are you then going to invoice it properly? Or if you try and invoice something that's not happened and the client say, no, you're making that up, they could use that then as leverage to say that the other stuff hasn't been done as you're saying it. So it's all about making sure that when these variations happen, you're tracking them as soon as they happen, you're putting them down on the job sheet, you're getting the variations invoiced, and you're making sure they're getting paid for, because otherwise you're working for free. And that is going to really, you're going to feel that, because that job that started here that's here, well, if you're still invoicing for here, there's a massive loss. So you've got to be on it with variations and changes, and you've got to record them, and you've got to get those invoices in as soon as it happens.
Yeah.
I had this yesterday actually with one of my clients, and we were talking about he must take the photographs and get the guys to take the photographs to show they've completed the areas of the job, so that they could then come back and get the proof. Also, the guys on site are trying to be a helpful lot, aren't they? So they don't know the contractual ups and downs of your deal with the client. And what they'll do is one of the guys will come along and say, hey, site manager will say, can you get that bit done as well? And the guys on site are trying to be helpful. They're trying to do you a favor for your business, but you've got to make sure they collect it. Otherwise, it's just you're wasting, you're burning your money up, not the client, for the extras that they actually want. You wouldn't go into Tesco and say, oh, can I have a couple of extra packs as well, but I ain't going to pay for them. Is that all right? It just wouldn't happen, would it?
So I guess this is one for all of you. So I wouldn't mind if everybody could share one of them, I guess, the most important tip that you can from each of you on how to manage cash flow. We'll maybe start with you, Rob Driscoll, and you can elaborate on the before.
Well, I've probably given it, which is just look at, first thing you do, as James said, look at the job, see what your cash flow window looks like, and don't even touch it if it doesn't suit your business model. But I'll expand slightly on the other issue that I raised earlier, which is inflation. At the moment, we capture data working with the Electrical Distributors Association, which highlights the inflation rates, particularly on M&E. So this is not general inflation running at 5.5%, which is what you'll get when you go to Tesco's and do your weekly shop. This is not bricks and sticks construction inflation. This is pure M&E stuff, and particularly E. 80% of the wholesalers and manufacturers saying inflation was above 10% already. We're now rerunning that survey to capture above 20% inflation. I've just done a analysis to feed into the government on the Russia-Ukraine crisis. Initial findings thought that we only get 4% of gas from Russia-Ukraine and 1.25% of all construction products out of Russia-Ukraine. That's not going to be the impact on us. The impact on us is that the UK gets a hell of a lot, a hugely dominant percentage of the raw materials to make copper, steel, and microchips, because palladium comes out of that region. So my top tip for you is you cannot take the risk of inflation if you're going to survive over the next year or two. At the moment, That business model of window that I described is you pricing a job sometimes quite a long time before you start the job, and then the job has to run till its completion. So you could be pricing it anywhere up to 18 months old when you finish the job. And if inflation pre-Russia-Ukraine was running above 10%, think about what the hell it could look like as we go through this crisis. So my top tip is, please don't let materials and disruption of that be the end of your business. That's quite foreboding, but I just want to give you a heads up on it because the bigger business is already woken up to this.
Oh, I know you're not trying to make it sound like doomsday, Rob. Don't worry.
It's my job. Sorry.
Good advice. Robert Davidson, what would your most important tip be?
I think it would be to set up proper systems and proper processes. I think a lot of the time making decisions on bad data is worse than making no decision at all. So I think as long as you have those systems in place and you then have, if you look at very simply, you have data in, processing data out, you want to have data in to your systems as good as possible. You want to process it in the most efficient way that gives you that output that you're looking for. And I think it comes back to something that James mentioned earlier about maybe monitoring those KPIs, identify those KPIs that will help you make decisions. Because at the end of the day, that is what management account information is about. That's what cash flow forecasting is about. It's about putting it in terms that you understand that allows you to make decisions for your own personal circumstances. I've seen management accounts reports be 60, 70 pages long and be just full of faff. So oftentimes it's about reducing that to the key information that helps you make decisions.
Perfect. Emerson, obviously the clients you deal with, I mean, you know a lot. What I guess the most important tip that you would give your clients or anybody that you engage with?
Well, we've given a lot away already, but I suppose just to say again is know your numbers. Like I use this sort of stuff. I get data that tells me what's going on with my business. So what you've got to do is realize you are no longer a hands on the tools kind of guy. You have got to, unless you're only one man in a band, and even then still know your numbers. But what you've got to do is, as you're building a business, you've got to recognize that you are actually a business owner. So there's more to it. It's all of the different areas you have to know, not just finance, but operations, HR, marketing and sales. Yeah, that's what we talk about in my book that's just come out, Bright Business Transformation for Contractors. You've got to understand all of the different bits and how they all work together. A business isn't just operations or just finance. They all interlink and they all work together. The team, the HR, the marketing, the sales, the leadership, the planning, everything. I've just done an article about that as well. So if anyone looks at my LinkedIn, you'll see I've just written an article about it. But anyway, that's what I'd say. It's about, no, you've got to develop your knowledge. If this is not an area you're strong at, you've got to learn it, because you've got to be an owner, and a business owner takes accountability for what's happening with the numbers, because 96% of businesses die because of cash flow. So if you don't take real responsibility for it, you're going to be in stuck.
Yeah, James, obviously I'm sure yours has been a journey as to where you are now, so I'm sure you've got a nice big book of tips, but what would be I guess the takeaway or the most important one?
Yeah, I mean, all three have said some really, really valid points that I've definitely used in situations I've been through. I mean, one tip from me would be, don't be afraid to ask for help. Don't be afraid to go out and seek help. So, I mean, some people won't agree with this, but there are avenues you can go down for investment within your business loans. Obviously, make sure that you are properly working out a financial plan if you are going to seek investment in the form of a loan, business loan. But there is nothing wrong with getting an injection of cash into your business to allow you to keep operating, move on to that next stage of growth. You know, people sometimes get quite scared of getting a business loan out because of the debt that's involved with it, but it can be a positive. And as long as you plan and strategize with your business coach, your accountant, it can actually be a really positive thing and can have a massive impact on the growth of your business, because you are injecting a load of capital into your business to allow you to go to that next stage. And, you know, even if you are struggling, don't suffer in silence. Go and seek some support from a business coach, an accountant, a solicitor, whoever it may be. and try and get your head around the situation you've got. Because a lot of people bury their head in the sand and then they let a small problem spiral out of control, and then it is literally something that they can't get a grip of, and they have to end up closing the business. Sometimes it can be avoided. So yeah.
Great, thanks guys. Well, let's have a look at some questions that might come through. For anybody joining us and watching, please post those through and we'll try and get to them. We've got one where I guess this is more of an observation within the electrical industry, that SMEs typically they're working hard to carry out the installation, but with delay in invoicing because they're often so busy and find the administration part of it difficult. That maybe resonate with you, James, or any of the clients that you all work with.
Yeah, you've got to be on it with stuff like that. You know, we've got an office team now, but when I was doing, spinning all the plates, it's really difficult. You know, you can't stress that enough. It is super difficult to try and do it all, but you have to make time for it. If you don't make time for it, you're not going to get that money in. So whether you do it 2 days a week or at a specific time at the end of the day, you've got to get the invoices done. You've got to do the admin, because at the end of the day, you're operating a business, and without that, you haven't got a business. So you may as well go and work for someone. You have to give yourself that time to do the admin. It just is what it is. And eventually, you'll hopefully get to a stage where you can get someone in the office that can be doing that for you, or you yourself get in there. But do not neglect it, because it'll end up coming back to haunt you.
Can I say that I always recommend that you need to have a right-hand man and a left-hand lady in the office, or a operational person in the office, right? And I've just found that ladies are better administratively than blokes most of the time. I have some clients where there's a guy in the office, but generally you need somebody to help you get your admin done, because we talk about having £1,000 tasks, £100 tasks and £10 tasks. I talk all about it, in the book, and if you go to my website, there's a blog all on this about task and time. And you've got £1,000 tasks. As the business owner, you need to do those. They are the winning new contracts or recruiting new people. Because if you look at what each person's worth in your business, who's an engineer who's delivering, they're actually worth £100,000 to £150,000 a year to you in your business if they're doing it right. So your job is to do the higher level stuff. The medium level stuff, you might do a bit of that, but that's where you kind of get your right-hand man doing the operational planning work, the purchasing work, that sort of stuff, negotiations and all the rest of it. But your £10 tasks, you shouldn't be doing them yourself. Like literally, I've got a VA. I started with her doing 10 hours literally a month. She's now doing 80, 90 hours a month. She's got another VA helping her, and she's now my operations manager. Couldn't live without Rita. She's like amazing, right? She makes all of that stuff happen, because in the end, your time should be better spent either working on winning new contracts or recruiting new people, the higher level stuff, right? And outsource and get those basic £10 an hour tasks off of your desk. And if you can get somebody else to invoice for you, that's great, unless you've made it as a pickle to invoice because you haven't written all the stuff down. So as you said earlier, Robert, it's getting the data in, but it's making sure that when you're doing a job, you're writing the details about what's happening so somebody can invoice. So you've got an invoicing system that people can use. Even if 80-90% of it gets done and you just have to cast your eye over it, it'll be much better than you sitting up to all hours doing it yourself. My accountant does my bookkeeping as well. They do it all in one place, and any other bits and pieces Rita picks up and organises, So
can I just add to that? Sorry, I think this is where systems like simPRO are really, really useful as well, because we're a zero only practice. We've got clients using simPRO. Now, you can actually lower that admin burden by actually having information sent directly from simPRO to Xero. So you're not having to recreate it. It's actually posting there. So that then makes it easier if you're working with a business coach or an accountant, that everyone has that visibility around what's happening. But one of the things I see as well is make it as easy as possible for the client to pay you. Like if you're using Xero, for example, you can add your Stripe link onto that. So when you email that invoice out to a client, they can actually just click a link and pay it there and then as well. And there's other options as well. So if you need immediate cash, because I sort of put businesses into 3 buckets. You have your month to month, you have your cash rich, and you have your cash poor. If you have your cash poor, you just need money in instantly. Then if you're using a system like Xero, then you can use something like a WalkAPay, which is like instant invoice finance. It's like a 10-minute process. You get your money instantly. Your customer can set up payment terms to pay you over 90 days and things like that as well. So using systems and automation really helps reduce that admin burden. Sorry.
Exactly, and if you've got maintenance contracts and things like that, maybe if you're doing fire and security or whatever as well, then get them on Go Cardless or some kind of direct debit system. That's what I use, so I don't even have to worry about it every month. The money just comes in, and you know that it's recurring and it's coming in, without having to like constantly chase people. Because actually, there's quite a bit of cost to the chasing as well. If you look at how much admin time gets eaten up with chasing and hassling people. So on that note, you've got your A grade clients who you really want, your B grade clients who you're basic. So you're awesome, you're basic. Your C grade have got to make a choice, right? And the D grades you want to delete and get rid of, because the D grades are burning up your cash, using your money, using your people, and making no money. So you're better off deleting them and not even working with them. And the C grades, you put the price up, and then they either choose. That's what one of my clients yesterday did. He put his price up to them on the next project. He said, right, so then they either become a B grade, yeah, and there's extra money in it, because he kept getting variations that he wasn't able to claim. Nobody would write anything down, nobody would sign anything. So he's like, he doesn't want to work with them, so he put the price up for the next job, and that either gets them into the C or down into the B or down into the D grade clients. And just be careful who you're working with. That's what I would say as well.
Okay, great. Awesome. Well, I think we'll call it there. If we haven't got to your questions, we have got your details, so we will follow up. I'd really like to thank our panel of experts for all of your thoughts and all the insights that you've shared today. And everybody who's joined, thank you very much for joining us today, and have yourself a great day and end to the week. So thank you.
Yes.
Thank you.
Thanks.